Joining us now is Steve Martens, CEO of the Martens Companies, and Justin Salmans, Vice President of Supply Chain Management at Textron Aviation. Please join me in welcoming Steve and Justin this morning. Steve, I'd like to give you just a couple of minutes to respond to that presentation, if you will.
Thank you. Certainly, my takeaways from Jeremy's comments, the phrases momentum and fundamentals, I think that's very important for us as we're trying to as we look at the Wichita economy and the regional economy and try to figure out, as we're all planning for 2015, what's going to happen. I was also encouraged in his business survey. The negatives were a lot smaller than they've been in the past, and by that I mean, Jeremy, if I understood that correctly, only 11% of the firms polled viewed that their employment was going to go down. Only 16% thought their market for the coming year would decline or be uncertain. And so I think continuing to see a shrinkage of those numbers is very, very important to us. Jack, in his comments today, coined the terms ability versus willingness. And as I think about the commercial real estate market, I think that's very applicable to what we see in Wichita. We've had the ability for a number of years, and by ability I'm thinking of cash on the sidelines, available money to deploy in real estate, but there just wasn't a willingness. There was an uneasiness and uncertainty. And I think as we move more towards more confidence in the economy, more towards a bias of growth, if you will, that we cross that line from just ability over to willingness. And certainly in 2014, our company has seen that across the board. It's been a very strong year. Due to time, I'm not really going to get into commercial real estate statistics today, but each of you have been given a copy of our new 2015 forecast that was just released yesterday. And I know that Tom Johnson and I'd be more than happy if there's questions after the event or later on any of our findings to share those with you.
Justin, would you like to comment on Jeremy's presentation?
Yes. I think kind of confirms what we see inside our industry and the rules that used to work on how we used to forecast, predict, and cash on hand, corporate profits, things of that nature. They're not as sticky as they used to be, and so we definitely take an approach to markets with a lot more flexibility. We need to have more variables in our cost structure to be able to react quicker to things that happen, whether they're overseas in other markets, and whether it's in Europe, things that happen in Asia. So we are doing those things, and you can see that that's coming through in the way we do business and the way we forecast. And they're not as firm as it used to be. So I do want to confirm that. And we try really hard to work at growing those markets, but we're definitely subject to the global influences. Very, very few of our products actually deliver inside of this economic zone. And so things like banking relationships and interest rates, they do affect our business. And we watch those very closely. What's interesting about it is referencing Richard Apodaphoulos from the Teal Group is the bifurcation of our market. And the people that are buying the planes that we particularly make in this zone are below the 3,000 mile range. They tend to use credit. And so when the credit market dried up in the housing, it also dried up in the acquisition of light aircraft. So you saw the larger aircraft continue to sell. It turns out the very, very, very wealthy community doesn't need credit. So they continue to purchase those things, and our market dried up. And we have seen a little bit of support coming back in that channel for getting financing as those assets become firmer and what their valuations are. We are seeing more lending opportunities inside that.
Jeremy, manufacturing has been a driver of our regional economy for many years, but has been in decline, as you were talking about that earlier. But what do you think will be the future drivers of the Wichita economy?
Well, I think when you start looking at some of our biggest assets, I think the workers themselves are our driver. They are the biggest asset. But when you go down to this, you look at machinery manufacturing, and you look at the potential of exports, we've been studying this with the Brookings Institute, the potential for our companies to be more engaged in exports has the best opportunity for expanding. And I think it has the best opportunity for expanding, not necessarily we have to expand directly, and I'm looking at some people right here, but we can actually look at other regional markets. And the center has worked on a study that looks at the opportunity in our regional markets around us, Denver, Oklahoma, and says, what are they producing that could be good direct linkages to the industry and structure that we have here? And we'll be coming out of this the next month or so to release this. And I think that is actually the best asset that we have, is taking the sectors that we're good at, not necessarily getting all direct exports, but connecting them and export to a market right next to us in Colorado or Kansas City or these larger markets like that. So I think there's a lot of opportunity here looking at there. Now, professional services, especially when you talk about technology, we're at a point where there could be some great opportunities. We've seen some technology companies emerge here. However, if we look at the long-term potential for this, we're going to run out of steam on this train. There's a train coming down. We only have so much labor to fill it because it's already tight. And if we don't get more labor trained or we don't attract them, that one's going to not be able to continue to grow our economy. Another thing to think about there is the match of this with the way the university is using the Innovation Campus. This is a longer-term strategy. It will take quite a while to get that technology into a marketplace and to get businesses to build that up, but there is some great longer-term assets. You just got to have to wait and have some patience for some of those sectors there.
How about in the real estate area, manufacturing's impact on what you do in real estate, Steve?
Well, the industrial market did take a pretty significant hit in the recession, although we've seen tremendous activity, overall vacancy coming down, and really for the first time, rents starting to increase. And some newer properties that have come on the market, we're above $450 per square foot on a rental rate. You've seen slides we've used in the past where we were kind of mired at $350 to $375 for a very long time. So I think that growth is positive because as those rents increase, it's going to generate interest to build more new manufacturing and industrial, which we're going to need.
Justin, I'd like to ask you, how might the recent merger of your company allow you to be more competitive in the market?
Yes, well, it's a very good question, and Textron and our company felt like it was the right move, and the marketplace was asking for it. So when you consolidate two legendary companies like that, it brings two great brands, two leadership teams, a lot of manufacturing capability and capacity. You have a large defense group inside the Beechcraft Defense Company. Textron feels like they can unlock some of that beach defense and bring it to a broader market. Textron's defense is right around a $5.5 billion company worldwide, and so we're able to take the products in that platform and take it to a global market. So we feel like there's some opportunity there, and you see we're willing to speculate inside that market, even with our Scorpion product, where we had an innovation run. We have a lot of people interested in that product, but there was not a government standing there handing us money. And so we're willing to work in that space. I feel like we can unlock that. Some of the things that gives us is less competition inside the King Air and CJ markets. The consumer, instead of playing us off and driving growth prices down, now we can say, yes, you can have either one. And that's, it starts giving price support because it wasn't there before. And so we believe that's really going to help our general aviation market.
Can I add to that? Avalafia from the Teal Group had said this a couple years ago. There was too many competitors in the space. And when you have too many competitors, it's exactly what you said, is pushing those prices down. This is the healthiest thing that really happened to this market, is this merger. And although we see this and we're losing some of the names and legacy this way, we're not really losing it. It's combining and it's actually making a much more stronger, healthier marketplace, not just the company, but whole marketplace. That's a good long-term position. I think we've already have made it through that structural part of the aviation marketplace.
The business survey indicated that they were a little negative about the economic environment. Jeremy, could they have been even more pessimistic?
So when you think about companies here are saddled with sticky wages and all the infrastructure costs And when you have a slow growth economy, the inflation is not helping you get out of it, right? So in some cases, they're feeling a lot of that pressure. We've had this conversation several times. Now, I will also say that businesses here tend to be a little bit more pessimistic, I believe, than the national economy. We are very conservative. We're going to have a negative view. So I like how Steve made some more positive spins on this. There's less people being negative than that. And I think that's a good way to interpret the business environment here.
Steve, investment real estate has been in high demand. What types of properties are selling for the highest prices and most attractive to investors?
The most attractive investment property today in retail would be a single tenant with a credit national tenant. Those properties are selling very briskly and at near record prices. Multifamily is another area that has been very strong, and not only in the country but also in the Wichita market. I think as companies or investors continue to try to diversify portfolios, Steve, and chase returns and spread risk, they're going to look more and more towards real estate investments to help balance their portfolio.
Justin, we talked about Asia a while ago. How will China's demand to increase their aerospace manufacturing affect companies based in the U.S.?
So China's working pretty hard at opening up general aviation, but it's a slow industry to grow, as you have to get into aerospace, and the military controls a lot of that. But they have it on their 5-year plan. They're going to build 100 airports, and they're starting to lift the flight altitudes where people can actually fly a direct and fly. So we see that as a space where we have to be in order to be there for the beginning of that growth. They tend to be very loyal in their product selections, and so we need to be there in the beginning. For the foreseeable future, I would suspect that almost all of the products that we build today will still be built today and shipped to those locations and those markets. The FAA has tight controls, and we have quality controls on those things, and so that'll be a huge export market for us, just like it is today, just like Europe or other Latin American countries. So.
Let's talk a little bit about, if we can, Jeremy, about the recession. You and I have talked about this a little bit in interviews in the past, this great big recession. It's hard to know for lay people, is this thing over or not? Or will it ever be over, I guess?
Well, so the recession is technically over. However, we feel it all in this labor market. That's what has been happening since this recession. It's the labor market re-engaging and growing slow, consumption because of the financial thing. So financial conditions in housing. So when you really talk about going forward, we are past that. This is our new reality. And we, just kind of, I tried to make it pretty firm today just so that we don't have these false expectations. I mean, this is the new reality. We're going to have to deal with it, to be honest with you.
All right. How about you, Steve? Will you want to comment on the recession and where you think we are?
I think as far as the commercial real estate industry and the Wichita market goes, we're past that issue, and there's prices have rebounded. Probably one of the greatest things that we have, and I'm sure all my banker buddies this morning picked up business cards as they were leaving home, so I'll plug you now. Rates are incredible and very available for commercial real estate, and probably we've not seen times like this, and according to Jack, by the end of the year we won't see him again. I'm going a little longer than the end of the year, Jack, but that's okay. But a tremendous window and opportunity on interest rates to buy business property, commercial property, and investment property.
Justin, what are you expecting to happen in the aerospace supply chain in the next 5 to 10 years?
Well, Lillian probably talked to you a little bit about the transportation market, and it's really heating up. So they're going to consume a lot of capacity in the supply chain. In general aviation, we tend to purchase intellectual property in a more local region to minimize risk. Whether that, if you start getting too many risk zones outside of our state, country, economic and political range, we have a hard time actually getting products in if something was to happen. But intellectual property we tend to buy in a broader community, right? Engines, avionics, and that could be a worldwide purchasing. But in terms of the actual structure, what we have today, in terms of GA, I consider it to be flat or slightly up. The transportation market, I think the Spirit's just going to fill it, and they're going to be looking for places to put things. Boeing is driving that. They're competing on a global scale, and we'll be competing with them in some cases, trying to get the machine tool time. So if you're out there lending the machine tool community and the purchasing guys, let them have it, right? So we'll show up and help fill the backside of that space, right, Lillian? So.
All right, Steve, approximately 2,000 new apartments on the market. Is the Wichita area nearing a glut of available apartment units?
You know, Steve, it's been very interesting. You watch the multifamily cycle in Wichita, and we kind of have a decade of development, a lot of new product on the market, and then a decade of absorption, repositioning, sometimes foreclosure. I think in this round, we probably still have need for more multifamily units. I think that's driven by a shift away from particularly younger demographics in purchasing a home versus renting an apartment. You look at the new units that are coming online, all the amenities, very nice, very, very appealing to that age group as well as older age groups. So I think we're in balance, and probably we'll see some additional developments come online before we're saturated.
Back to Justin for just a minute. What product lines of Textron will have the largest value in the Chinese market, do you think?
Well, usually the first people to buy in that space have been the largest consumers, and everybody wanted the biggest plane they could find and then stick it on a runway and then not be able to fly it. As austerity is coming into the space and people are beginning to use it as a tool to get from point A to point B and see the businesses, we are seeing them come and buy the smaller products that we build. I think 3 or 4 months ago we sold 3 XLSs in the same day. That's a small mid-range aircraft, and so we're hoping that as the business tool side comes up, they'll come back into our space, and the idea of having an airport yacht is not as important, and so we believe they're coming towards us in the way their purchasing behavior is, and we're starting to see that. We're also seeing that the actual getting packages from places to places is becoming more important. When you think about what we have in other markets with FedEx and UPS, DHL, and other services that get products places, that's starting to become an issue for them in terms of getting things from point A to point B really, really quickly. And we have some planes in that space. The King Airs and the Caravans will definitely start filling some of those transportation groups.
I think everybody's excited, Jeremy, about the new airport, the new Eisenhower Air Terminal. Did you have anything that you were looking at there, assess what the impact of that might be on the local economy as far as when it finally gets built and up and running?
We would love to do the impact.
Pardon me?
We would love to do that impact, but we haven't. We have looked at some air services in the past, looked at the impact, but we haven't looked at the impact of it itself on the economy. I think that's the conversation that needs to come up, because if there's some competition within the state, right, and they're not going to be as efficient or effective as the Wichita one can be, if that's the pressures that are going there, there's some dialogue to be had there to talk about, how are we going to deliver air service in Kansas as the only real airport in the state, and how are we going to support this one across the state? So I think when you look at the impact, it does have value. It keeps businesses productive. It keeps people connected, but we haven't looked at the impact yet. So
Back to Steve. With approximately 2.3 million square feet of Class B office space downtown, what is the future for the vacant space?
Well, certainly the Class B space in the Central Business District has been a lug on the market. What we're beginning to see is several property owners stepping up, renovating properties, getting them back in proper condition. You look at what's happened in the transformation of the Bank of America Center, Riverview office building, the River Park Plaza, and 125 North Market is probably the most recent one to be added to that list. There's beginning to be some differentiation in the marketplace between buildings that are properly operating, properly cared for, can deliver a higher value, and those are going to be the spaces that will lease more quickly on the market. And I think this move is necessary to start having some of that vacancy disappear.
Jeremy, I'm going to throw this in kind of sort of a final question, I think, for all three of you. And something I've been thinking about this morning, we're talking about shortages of pilots. We're talking about younger workers and training them properly. And talk about older workers, we're kind of lingering, some of us, in the workplace. We're not getting out of the way very fast. What is the challenge when it comes to just the labor pool, the people who are working in the next 2 or 3 years?
Well, this is a great opportunity. There's a professor at the university that's studying the manufacturing. We gave him a summer research grant to look at manufacturing and aging workforce, which I think will be out pretty soon. And so we'll have his results thinking about manufacturing entities themselves and how to transition. So we'll have that paper out pretty soon. When you think about the overall market here, and you think about the aging or even the lack of supply of labor in some sectors, because we have a lot of demand for business majors, but we don't have enough supply of business majors. One of the biggest things to fix our problem here in manufacturing and professional services and healthcare is to figure out how to get people to migrate here. Not only migrate around this region, across the US, but out of country. That could really be solving a lot of our problems, even in manufacturing. Why does Spirit need to be in another state? It's because we produce aerospace engineers, but they need other engineers, and we can't necessarily attract them here. Why does Coke having troubles? They can't attract enough people to move here. So it's really an attraction strategy would help our labor strategy here. We could grow faster if we can get them here.
Justin, how about it? You're in the manufacturing business. What's your labor force look like? What are you looking at in the years ahead?
In terms of pilots,
Yeah.
we want as many of them as we can.
You know,
But our labor force, I think, is pretty strong. You know, we have a lot of training in our area, the WATC, the NIRs, and there's a lot of ability to pull people through that. One of our issues would be, cycle time. And so if we see a market turn, you can't just hire somebody off the street and start putting a plane together. And you have a little training, and then they got to understand what's going on. And so it's really more of a longer cycle than what you might see in a retail or a business management role. And you have to have that infrastructure there to be able to pull people through and make planes safe. But we feel very good about our community here in terms of being able to hire people in this space, and we'll be doing that.
Steve, for 2015, what are the strongest segments in the market for you?
Well, we've talked a little bit about the investment side. That's going to continue to be very strong. Jerry Jones chatted earlier on retail, and I think there will be strong continued retail development. Rents are going to increase there. We're seeing a lot, even with all the new apartment units coming on the market, significant rates in monthly rental rates for those apartments. So I think most of the segments will see some pretty significant growth in 2015. Probably the softest in the Wichita market will be the office market.
Jeremy, I'm going to give you the final comment here. You can put a cork in a bottle. You can put a cork in a bottle. Your final comments today?
Yeah. Oh, final comments.
Yeah.
So our expectation of the economy increasing is a good news. I just wanted to reinforce and think about this in context. And that was the real theme I thought was important for businesses to take away today. So if you have that feeling and understanding of what our assets are and how we are in context to the U.S. economy, I think that's the most important component I think someone could come away today. I think that's my final comment. Thank you.
Okay.